What a day. Seriously, January 15th, 2026. This is one for the books. What looked like a total meltdown for tech stocks yesterday turned into this massive AI-driven comeback that left pretty much everyone scratching their heads. But not everyone was caught by surprise. So let's break down exactly what happened.
Just think back to yesterday afternoon. The mood was awful, right? The AI stocks that have been on this incredible run were getting absolutely slammed. The whole story felt like it was falling apart, and the big question was, uh-oh, is the party finally over?
And then this morning, a complete 180. So what happened? What was the spark that just flipped the market from total fear into, well, total euphoria? That's the billion-dollar question, and we're going to get into it. Now, this right here captures the fear from yesterday perfectly. It wasn't just some vague feeling of weakness. No, this was a specific scary headline. China putting restrictions on Nvidia chips. That hits right at the heart of the entire AI boom and sent a chill through the whole sector. Okay, so in a market that's just flooded with all this noise and conflicting news, finding a clear signal is, well, it's everything. At PhilStockWorld, they're using some seriously advanced tools like an AGI named Zephyr. Think of it as a data synthesizer designed to cut through all that chaos to find what actually matters. And here's the kicker. This was from the pre-market brief. Before the opening bell, before most people had even finished their first cup of coffee, Zephyr had already crunched the numbers and was calling for a tech bounce. While everyone else was still panicking about yesterday's news, the AI had already seen the next move. So what was Zephyr seeing that nobody else was? Well, the huge catalyst for today's rally. It wasn't coming out of Silicon Valley or New York. Nope. It came from across the world. From Taiwan Semiconductor, TSM, probably the single most important company in the global tech supply chain. And TSM didn't just beat their earnings expectations. They completely blew them out of the water. A 35% jump in Q4 profits. That is staggering. For a market that was desperate for some good news, this was like a bolt of lightning. It was proof that demand for high-end chips is not slowing down, it's speeding up. Oh, but it gets better. They didn't just talk about the past. They dropped a bombshell about the future. TSM announced they're planning to spend up to $56 billion in 2026. Let that number sink in. That's not just a budget, that's a massive all-in bet that this AI boom is really just getting started. And you can see the ripple effect right here. TSM's news created a tidal wave. Their own stock shot up, of course, but then chip equipment makers like ASML hit record highs. And, naturally, it put a rocket under stocks like Nvidia. Just like that, the AI story was back on and bigger than ever. But as wild as that AI story was, it wasn't the only major thing happening today. While all eyes were on tech and its crazy swings, the big Wall Street banks were over here quietly posting some absolutely monstrous earnings of their own. Look at Goldman Sachs. They reported an all-time Wall Street record for quarterly equities trading revenue, $4.31 billion. It's just a reminder of the raw power and profitability of big finance. And this is the really fascinating part of the day. You have this huge disconnect. On one hand, you've got the AI hype train going full speed with investors getting euphoric. And on the other hand, you have the banking reality, where these giants post record profits, and the market basically just yawns. This is where you need that deeper analysis. Phil Davis, who founded PhilStockWorld, pointed this out perfectly. His take? The market's chasing the exciting, sexy story and tech, but the safer, maybe even smarter bet might be right here in these banks. It's that classic Wall Street battle, hype versus value. And this kind of counterintuitive thinking is a perfect example of what you find every single day at PhilStockWorld.com. It's about looking past the obvious headlines. It's no wonder Phil is recognized by Forbes as a top influencer and is one of the most read analysts over at Seeking Alpha. Now, on top of all the earnings drama, there were other big things moving the market. For the past few days, everyone's been on edge about the rising tensions between the US and Iran. That geopolitical risk was a major dark cloud hanging over everything. But then today, we got signs of de-escalation. The market collectively breathed a huge sigh of relief. And you can see the result right here. That risk premium that was baked into oil prices just vanished. Oil dropped almost 5%, which is a massive relief for the global economy. And as if that wasn't enough, the underlying economic data today was actually pretty darn good. jobless claims came in better than expected, and we saw solid bounces in some key manufacturing reports. It just added this feeling that maybe the economy is on a much more solid footing than we thought.
So let's recap. You've got AI hype, banks being ignored, falling oil prices, and strong economic data all hitting on the same day. It is a perfect storm of conflicting signals. So for a regular investor, the question is simple. How in the world do you make sense of any of this?
This is why having a community is so powerful. Here's a question from the live member chat at PhilStockWorld today. A member sees that exact disconnect we talked about with the banks and asks for a concrete, actionable idea. And look at Phil's response. It's immediate, it's direct, and it's referencing ideas that the group had just been talking about. This isn't some generic advice. It's a real, active conversation happening in real time. It just shows you the power of being in the room.
And really, that's the whole point, isn't it? In a market this fast and this confusing, it's not just about getting news alerts. It's about having a place where you can learn, you can ask questions, and you can connect with other people who are figuring it out right there with you.
So we end up right back where we started. On a crazy day like today, defined by this huge reversal and a battle between AI hype and banking reality, the biggest challenge is figuring out which signal you should actually listen to. Do you chase the story, or do you stick to the numbers? The answer to that question can make all the difference. Thanks for joining me.